Sri Shankar, the head of institutional sales at Prabhudas Leeladhar, and we will come back to you for more data. Abhishek, Sri Shankar, first thoughts on the Axis numbers?
Yeah, Lata, I haven't seen the numbers yet. No, it is. I don't think I've seen it in stock exchange. It's not yet.
No, I'm reading it out from the stock exchange.
Yeah.
And the important numbers, perhaps, that you would want to know. The profit has come in at 1,200 crores. I'm giving you an approximate number. I'll just read it out again to you. The net NPA has come at 2.1 compared to 2.18, and the gross NPA has come at 5.04 compared to 5.18, I think the previous number. No, 5.22 previous number is now 5.04. The total gross NPL number has come in at 4,811 crores.
That's
compared
addition?
to, yeah, that is total slippages, including net and including from the watch list and outside the watch list. Any thoughts on this much?
This is much higher than what we had anticipated in our expected addition of NPA.
Okay. No, this is not NPA. I was reading slippages to you. NPAs have grown marginally. From 20,600, it has gone to 21,400. So, gross NPA addition is only 600 crores.
No, that
Okay.
at the end of the day,
Slippages?
you know what, it will also have some additions and some deductions.
Yes.
So we did not have the breakup of the deductions, etc.
No, we don't
So
have that yet.
the additions itself, from what you said, is 4,811.
That is the slippages, yes,
That's a
4,811.
big number. And what will be interesting is what is the pre-provisioning operating profit that they have done?
Okay, well, that we have yet to calculate.
I'll give you the reductions in the NPA. The recoveries are at 2,800 crore versus 350 crore in the previous quarter.
Oh, good.
So that is a very strong recovery, while the write-offs are at 1,194 crore versus 122 crore in the previous quarter. So your recovery, I repeat, is at 2,804 crore versus 350 crore in the previous quarter, and write-off is at 1,194 crore versus 122 crore in the previous quarter. So your comments on the same?
So, see, if you ask me, you know, our total reductions were estimated were around from 1,975 crores. It is much higher than the actual numbers are much higher than what we had anticipated. Obviously, the write-off is also pretty high. So, we'll need to dissect the numbers much more or less. In anticipation, I'm still looking for that number of
operating profit before provisions and contingencies is 4,374 crores compared to 4,600. So it's fallen by about 300 crores.
Yeah, that's slightly better than what we have anticipated. We had anticipated closer to 3,883 crores.
Okay.
So there is a definitely certain improvement in that operating profit numbers.
Yeah, probably there is a reduction in OPEX.
Effectively coming from NIM expansion. And
Yes, yeah, the NIM expansion is impressive, would you say? It has risen to, I think, 3.8 from 3.4.
Yeah, that 40 basis points improvement is quite a big change. Probably the reversal in interest wouldn't have come in, and probably the cost of funds. We don't have that numbers with us. I think it would have been much better. So that's what.
Your initial comments, therefore, on balance, are positive.
I would say that I would love to hear the commentary. Where definitely this is a bank which is slipping from what do you call the watch list. 3,811 crores. How much is remaining? Is still, I think, 11,000 crores or something in the watch list.
Yes, absolutely. Yeah. You got it.
We don't know what the standard, and we need to see the fine print. Otherwise, it's more or less in line in expectations, I would say.
Yeah, thank you very much, Sri Shankar. We also have Kajal Gandhi and Mayuresh Joshi with us. Your thoughts, Kajal? What stood out for you?
So broadly, the numbers are looking better than estimates on the NII because the margins have improved, and the bottom line has also come in stronger. It seems the provisions have also been slightly on the lower side, taking the bottom line much higher.
The provision coverage ratio has incidentally improved. It was 64% in the previous quarter. It is 65%. So they have not scrounged on provisions.
Okay. But then overall, if you look at the slippages, they have come on the slightly higher side. But if we look at the stability, if it is able to bring on the stability in the bottom line also, because we have not seen these kind of numbers in the last couple of quarters. So it will also be positive from that angle. But yeah, commentary from the management on the watch list and the slippages will be seen actually.
Okay. Do stay on. Mayuresh Joshi is also with us. Mayuresh, first the asset quality, what did you make of it?
No, asset quality, Lata, much better than what we had anticipated. We were expecting GNPs at around 5.5, net NPs at 2.3. So it's been much better showing on that front. The only factor was that the slippages that we had accounted for was in fact lesser than in Q3. That has actually gone up, and what we are actually seeing from the numbers is the non-watch list slippages have actually gone up. So from 845 odd in Q3, that's actually jumped to 1245. Yes, it was 1251 in Q2 FY17.
Yeah.
But largely, again, I think one must really look into the management commentary in terms of what has actually stripped through from the non-watch list. Otherwise, I think numbers are more or less in line in what we had expected in terms of advances, in terms of the NII growth and the bottom line as well.
Just a word from Abhishek. He's been reading the press release. Abhishek, anything more you want to point out and get comments?
No, there's nothing more in terms of, press release. But the loan growth is at 12.5% on a YOY basis and 10% on a quarter-on-quarter basis. So that is a strong jump. While your low-cost deposit share also is at high elevated levels. So overall margin expansion has come in from 2 points. One is your loan growth and the stickiness of low-cost deposits.
Yeah, advances quarter-on-quarter is a big jump. Of course, HDFC also posted about a 12% rise quarter-on-quarter and a 19.4% rise year-on-year. Axis has done a 10% growth in advances year-on-year and a 12% quarter-on-quarter. Mayuresh?
Yes, I think so. If you go by the show on what HDFC Bank has done, it was an exemplary performance. But yes, Axis Bank also has delivered more or less in line. I think, again, on the advances front, we were a little bit more optimistic. But it's not a bad figure. I think 10% net advances growth is commendable in the environment that we are working out of.
Okay.
So the management commentary is pointing to a robust growth going ahead, with credit costs expected to come down and with provisioning coming down. And on the watch list itself, I think that can be taken as a positive in terms of the outlook going ahead.
Chances are the stock could put on some weight tomorrow?
Possibly, because if you look at valuations on an adjusted book, FY19, it's trading around 1.8 times. So it's not cheap considering the kind of stress it has gone through. But if the commentary is on the lines that we are probably expecting on the street is believing to believe, my own sense is yes, a positive uptick is possible for Axis in tomorrow's trade.
Okay. Do stay on, Mayuresh. Kajal Gandhi is also yet to give us her comments on the stock performance. From the numbers, how do you think the stock might react, Kajal?
So the street has been long waiting for something good from the stock actually. But then yeah, bank has delivered slightly. If the management is going to give, apart from the growth numbers which they were already talking to be slightly improving, but other than that, if the management is able to give a guideline on the contained slippages, or if they are already through onto the major slippages, then yes, we think it will be a positive for stock to some extent.
Yeah, okay. Yeah, of course, one will have to wait for that. But at the moment, going by the profit that you are seeing and the book value that you must have calculated, what is your rating on the stock, Kajal?
So currently we have a hold rating, but considering the valuations at FY19 estimate, and if we factor in slightly lower on the GNP, we may be seeing some improvement on that also.
Okay.
So we can see positivity.
Okay. Sorry, what would you want to be positive on the stock?
Yes, guidance to be on the lower side on the asset quality maybe. That is one major thing that we'll look at. So according to the estimates, we'll also have to be on the lower side on the NPA, and that can push up the book value for future then. Okay.
Well, we will await the management's comments. The press conference is due to start in about 15 minutes or so. Thank you very much, Mayuresh and Kajal, for joining us with your first thoughts on the Axis numbers. Abhishek, any winding up details that you want to point out?
Nothing much. Their low-cost deposit ratio is now at a staggering 51%. So that is the highest amongst all the banks that we have seen results in the private space, or even in the PSU banking space. So that has obviously led to this kind of a margin expansion as your cost of funds is under control. Now the non-watch list slippages, which was worrying over the last few quarters, that had been increasing, has declined in this quarter. And from here onwards, what the management gives a trajectory in terms of slippages going ahead, and how much of this watch list can slip in, that will be the key trigger for the stock opening tomorrow. And on the analyst side, what they recommend post this result is higher than what street anticipated, and it has been led by top line. There is no one-off, like there is no other income kind of a contribution which can lead to a substantial jump. So it is your core revenues that are giving you this kind of a result, and asset quality under control. Let's see what the brokerages mention.
That would count as the positives, right? There is definitely a 12% growth in the amount of loans given quarter on quarter and 10% year on year. There is definitely an improvement in the bottom line. There is a very good improvement in the cost of deposits, 51%, as you said. Even HDFC Bank said only 48%. So this is a strong growth in low-cost deposits. This is a very good improvement in margins. Those would account as the positives. Yeah, a very strong recovery. So even on asset quality, the positives would be that the fresh NPA generation is practically, in single digits. That is largely because of a very strong recovery number, which is at about 2,800 odd crore. So excellent recovery number, and helped by a little bit of write-offs. The gross NPL is controlled. Now for the negatives on asset quality, it is still a high generation of slippages at 4811. While the amount of slippages from the non-watch list is less than the previous 2 quarters, it is still a high 1,200 crore. So together you would really want to know from the bank what is the future course of both watch list and non-watch list. From the watch list, about 3,000 crores has slipped into NPA, but they seem to have added also something to the watch list. It has, it's not fallen much from 12,000 crore, it's come to around 11,000 odd crore. So not a very big fall in the watch list. And there is the continued problem of non-watch list NPLs or slippages as well, which, to give credit to the bank, is less than the previous 2 quarters. So what will the next quarter and the next few quarters look like is what the street will want to hear. We will take a break on that note.